Good morning, everyone. My name is Shadab Tayabi. I am the president of the Singapore FinTech Association, an association body representing 850 plus corporate members in Singapore, and which comprise mainly of FinTechs as well as associate members. I also have a full-time job, which is basically running strategic partnerships and sales for Quantifeed, a digital wealth technology solutions provider, headquartered of Hong Kong, but we have offices in Singapore as well. Today's discussion is, I would say, quite interesting for all the fintech players and the ecosystem enablers. It's about how is Asian investment landscape for fintech evolving and paths to IPO for Asian firms in Hong Kong and beyond. And I'm joined by an esteemed panel of speakers, experts, who I expect to learn a lot from today. Starting with Renu Bhatia. She's the co-founder at Asia FinTech Angels. Kampanath Vimalnath, Head of Investment and Strategic Partnership, Krungsri Innovate. Veronica Kuznetsova, Director, Innovation and Strategy, UBS. I think there are a few things that we want to talk about today. One is about evolution of investment in fintech in Asia in the past 5 years. We'd also like to cover the route to IPO for Asian fintechs. Is there willingness? Are they ready? Are the opportunities available now better than the past few years? We've also been joined by William Bao Been, General Partner at SOSV and Managing Director, China Accelerator and Mox SOSV. I'd like to start with getting the speakers to give a bit of a self-introduction as well. Can we start with Renu, please?
Morning, everyone. I'm Renu Bhatia. I'm the co-founder of Asia FinTech Angels. I've been involved with the Hong Kong fintech ecosystem for a long time. I'm also a member of the Cyberport Entrepreneurship Committee, as well as a member of the listing committee of the Hong Kong Stock Exchange.
Shall we move to Kampanath now?
Hi, everyone. My name is Kampanath, and I'm Head of Investment and Strategic Partnership at Krungsri Innovate. We are corporate capital arms under Krungsri Banks, one of the largest banks here in Thailand, and we are a subsidiary of the Japanese bank, MUFG Group from Japan.
Thank you. William, please. You're on mute, William.
Yeah, apologize. William Bao Been, General Partner, SOSV. We're a global venture capital firm with 900 million under management. Number 3 most active VC in the world, number 5 most active in Asia, and quite active in fintech. Invested in quite a number of fintechs across the region, including the most valuable startup in the history of Hong Kong, BitMEX, which is a fintech, which in the Times of London 3 years ago, valued at $8 billion. I have no idea how much they're worth now, but that was based on their profit as opposed to a VC valuation. So thanks for having me.
Thank you, William. Veronica, please.
Sure. Hi, everybody. I'm Veronica, currently at UBS Evolve, which is the Center for Design Thinking and Innovation here in APAC for UBS. My role includes close collaboration with the fintech ecosystem, looking at where we can partner, develop future capabilities to drive our business forward, as well as by virtue of being one of the only on-the-ground feet here in Asia, also scouting for our global corporate venture teams and assessing potential strategic fit of local companies with whom we can build innovative technologies as target investment opportunities.
Thank you, Veronica. Maybe I'll just start with laying a bit of a background as well. So as far as the numbers go, as per CV Insights report, globally Q1 2021 has been the largest funding quarter on record for equity round of VC-backed fintech companies. Now it's by far the largest quarter for fintech funding, surpassing Q2 of 2018, which held the previous record, which included Ant Group's 14 billion funding round as well. And across the boards, there have been 614 deals, which are VC-backed fintech companies that have raised close to $22.8 billion. This represents a very high year-on-year increase and growth as well. Now, there have been 11 IPOs and 67 M&A deals globally as well. But let's come home nearer to home, Asia. The overall investment landscape in the fintechs in Asia has tremendously evolved in the past 5 years as well. Just last year, the number of VC-backed deals in fintech Asia increased from a quarterly average of 136 for 2020 to 147 in Q1 2021, which is higher than any single quarter last year. Also, the quarterly funding into fintech in Asia increased from an average of $2.57 billion in 2020 to 3.67 in Q1 2021. Now, all these are good signs that indicate that the fintech ecosystem is maturing, with an average funding size also increasing from $19 million to $25 million. And given that I represent Singapore FinTech Association, I have to talk about Singapore as well. There has definitely been an increase in the SG FinTech equity funding, and that, as per a report by BCG, SG's homegrown fintechs have raised close to $470 million in equity funding in Q1 this year. This is quite high compared to 355% higher compared to Q1 of last year, and already amounts to 46% of the total funding. Now, of course, Graph Financial Group Series A, played an important part, and a bulk of that is represented by that as well. So with that, I would say a positive start to this. I just wanted to, lay the question to everyone on the panel. How has investment in fintech evolved in Asia over the past few years, last 5 years specifically? And what are the key changes that you have seen? Maybe we can start with Renu.
Thank you. I think the last 5 years has seen really quite a maturity of the, as you just mentioned, the fintech landscape. And we've gone from sort of the low-hanging fruit, a lot of investments into sort of payments and credit lending. And in the last couple of years, we've seen a move. Sorry, something just came up. So we're seeing in the last couple of years a shift away from payments and lending, particularly in North Asia. I think we're seeing more in terms of investment in RegTech and wealth management. In the rest of Asia, I think we're still seeing a fair amount of investments going into the payment space, as well as the lending space. And what we are also seeing, I think, is what would be called the larger players coming into the Southeast Asian markets, and sort of the platformification of the fintech companies, the large companies like Grab and Gojek coming in and offering that engagement of their platform to bring on more value-added services. I think that's the bigger trend that I've seen in the last 2 or 3 years.
Thank you, Renu. You touched on how there has been a shift away from payments and lending in North Asia. Maybe I'll let Kun Kampana to give his views as well on this.
Sure, I can give you the view from the Southeast Asian markets. Here in Southeast Asians, we are following the fintech unicorns area, like the Lending Club, Credit Karma, or even Stripe in North America before, or even in the Europe. But very few of them has been successfully survived here in this region, because a lot of fintech regulators and also the incumbents are catching up with the fintech trends, and they are quite well prepared to encounter with those fintech trends. So in my opinion, there will be a smaller and smaller corner for the fintechs who trying to follow the traditional fintech role models. So and that because in Southeast Asia we have 10 countries, even we have the 600 million people here around, but you are dealing with a lot of regulators as well, lots of license to acquire, a lot of qualifications you have to meet. So and there will be 10 types of user experience and market landscape we have to deal with as well. So I'm observing that more the fintech who will be successful and draw interest of the capital will be more on the local play. You have to be success in your home market first, rather than to go as a regional play in Southeast Asia, whether it is B2B or B2C, especially the e-wallet and peer-to-peer payment as well. That's really hard for you to survive if that's the case. You're starting off with the regional plays. At this day, like Renu mentioned earlier, that those data holder like Shopee or Lazada or Grab who hold the data will draw more attention and interest from the venture capitals where they have the data, and they will be able to provide a financial service to those people, rather than the e-wallets and peer-to-peer payments players who doesn't have any data, so they have to add a new use case. As for the credit scoring and also the credit scoring, like who claims to trying to bring the new way of the providing the credit scoring to the financial institutions or the traditional incumbents as a banks, that's really hard for them to, because a lot of the data holder, they're trying to provide the financial service by themselves. So, but on the flip side, for those fintechs who draw more capital as of now, I observe the social commerce payment enabler, those who will be able to provide a better user experience for those social commerce, because Southeast Asians, we are on the rise for the social commerce market as of now, and also those who are will be able to provide and connect the incumbents financial institutions, whether it is payment or lending, to those data holder draw a lot of capital as well. Yeah.
If I can just touch on something Cameron said, I think one of the big things that's occurring in the last year in particular has been the catch up from the regulatory side in terms of the development of these very large companies holding lots of data, and the regulators are beginning to catch up. And I think particularly in China, this will have a huge impact on how the market develops.
Yeah, happy to speak to this a little bit. I mean, so we have a different approach at China Accelerator. It's a more at China Accelerator Mox under our SOSV umbrella. It's a little bit of an ecosystem play because we invest in so many companies. I think we have I have 165 active portfolio companies under cross-border internet. And so we're trying to take a page from, say, the Xiaomi's of the world, or even WeChat from China, and bring that to the rest of Asia. But instead of trying to build another super app, we're enabling traditional industry to become their own super app. So we're partnering with all the companies that are getting hit by big internet, who are getting, to some extent crushed by the financials of the world. So we partner with cell phone brands like Samsung and Xiaomi. We partner with telcos, have always been under pressure, even with banks. And they have users and they have trust. And what we bring is a platform of services. Now, the key with all these services is they don't make money, because traditionally all these mobile services like video or content or social make money on ads, but ads don't really make money in most of the markets in Asia, because Google and Facebook keep most of the money. So what does make money, though, is financial services. So mobile internet is basically FinTech, or that's where the money comes from. And so for our ecosystem, it's been a pretty tough ride. I mean, we started 5.5 years ago, and it took a long time to get to, it took 3.5 years to get to 6 million monthly active users, which is pretty bad across 15 companies. But more recently, since in mid 2019, we hit 50 million monthly active users, all with a customer acquisition cost of $0. And to February this year, we hit 102 million monthly active users. And now all these companies are cross-promoting each other. And the way they monetize those through financial services. So we invested in 2 credit scoring companies. We have 2 companies in the KYC AML space, especially focused on mobile first, mobile only consumers and small, medium businesses. And then we're partnered with local fintechs across the region who have those local licenses, and we've invested in some of them ourselves. So, for all the startups out there, grow up in your home market. I totally agree with Kampanat and Renu, and then find partners, and that's why a lot of earlier stage startups, not the later stage ones, but the earlier stage ones, find a partnership with SOSV and Mox useful. But thanks.
But that partnership model is also coming not just from the startups, but even the traditional financial service players are beginning to want to partner with the fintech startups, because this idea of going to the market by yourself and acquiring all these customers, the customer acquisition costs are just so great. So, 5 years ago, 6 years ago, we were talking about two very different landscapes, one with sort of fintech startups and one sort of the traditional financial services. And what you're seeing now going forward is far more significant collaboration. They're basically, a lot of the fintech startups are beginning to empower to some extent the traditional financial service players to actually give better service too. So the two are beginning to merge and collaborate a lot more, which I think is actually beneficial for the ultimate consumer, which is, all of us.
Yeah, we call it borrowing licenses, but yeah, it's a trade, it's a bartered trade, and it totally makes sense. So we're definitely seeing that.
Well, especially in Asia, where we have so many different regulators, and the cost of upkeep of this on the regulation side makes it very, very expensive to go out and do it on your own. So that's why I think one of the reasons we haven't seen very large companies develop across the region, rather than, say, the United States or Europe.
Great. I really see the discussion going in a very good, interesting discussion. I just wanted to, bring Veronica's view on it as well, in terms of, you run one of the, I think, if I'm not wrong, UBS announced last year about investing $200 million in a few companies as well. And you run Evolve too. So just wanted to get your view on how you think this arrangement of CVCs coming in, helping the startups ecosystem as well.
Yeah, sure. Thanks for the question. I think a corporate's role in the fintech investment landscape is quite crucial and central, especially as they start thinking about later stages growth. So moving on from the venture stages into private equity, into private placements, and then, eventually down the line thinking about listing. And, I've seen, we talk a lot with venture capital firms and we partner with them, as well as the startups themselves. So what we see is, really maturity in the investment side of the landscape as well. So the local VCs are starting to raise larger funds targeted more at the later stage. The international investors are also coming in because they realize that before, for example, for a Grab to raise around Series H, E, and beyond, they really need to tap into international global investors. But lately we're seeing these rounds being filled by, local ones, the likes of Sequoia or SoftBank. So definitely maturing on that side. The startups themselves are becoming much better at telling the local growth story globally and attracting these kind of global investments. So at UBS specifically, we have a very interesting initiative called Tech Connect, where we really try to bring the power of the bank together. We call it a One Bank initiative, where essentially we tap into the capability of the investment bank. So, they really look at corporate financing, helping the companies get into that next stage. Especially these days, one of the major trends is staying private longer. Right, companies are actually, the biggest value growth is happening actually before companies go and list on the public market. But even once they list as well, and in the stages before that also, how can they tap into or leverage the huge network of wealth that is in Asia already in terms of our wealth management clients? They're very, very interested into going into this pre-IPO stages and getting access. And I see a lot of these platforms popping up here that actually provide this access and democratize the financial capital market, such as, iStocks, CapBridge, FundNel, all of those. There's many ways for investors to access this kind of private equity investment. So that's all very interesting. And I guess one thing I want to mention in terms of, the companies kind of getting into fintech as a way to really increase their valuations and their chances of going public is, before I was at UBS, I was actually leading the product development at Grab Financial, launching Grab Invest, where what we did actually is acquire Bento, which is a local robo-advisory company, and integrate their solution. And one of the reasons was because together with that came a CMS license, which is very important to go into that market. But that is part of a well thought through strategy of many unicorns of actually entering into the fintech space and telling that story of accessing the growth from the underbanked population that is here in Asia. So it's all really maturing, and at the moment it's looking to me like there is a strategy and a thought behind it across the different stages.
Great, thank you, Veronica, for that. I think that is pretty interesting. I can see that there is a lot of synergy that is coming in with multiple ways of expanding the business, including like you said, acquisition to get the regulatory licenses, which sort of ties into what Kampanath and Renu were talking about earlier as well. So which brings me to a slightly I would say different type of question for maybe William and Kampanath. It's about the geopolitical tension between China and US. I mean, where do you see it affecting the business and companies that you invest in? Maybe William?
Yeah, sure. So I'm based in Shanghai, and because I'm based in Shanghai, I really don't talk about politics that much. But I can talk about like some of the changes that we've seen in the market. How about that? So I mean, the first one is you have a real focus on core technology. So we're a US dollar fund, we're an American fund. We don't have any Chinese money in our fund. It's always been difficult for us to, as international investors, to invest in China. It's actually gotten a bit easier recently over the last 2 or 3 years. Maybe less easy to get good deals, but easier to put capital to work because we have something called a foreign investment entity, which is basically a wholly owned foreign entity in China that can invest US dollars, turn them into renminbi, invest in companies, exit, take the renminbi out, turn it back into the US dollars and repatriate it back out, which so no JVs, we don't need don't need VIEs to the extent we did in the past for onshore exit opportunities. So there's a change there. But yeah, huge shift in the market to focus on deep tech and hard tech and core infrastructure tech within China, where the government points, the capital generally follows, and a lot of that capital is from the government. 72% of venture capital investment into venture capital firms comes from the government in China. So that's the big first one. The second one is, cross-border investment has changed quite significantly. So whereas before you had a lot of China investment in US and India, that's now shifted to other markets, especially Southeast Asia and other parts of South Asia and other parts of the world. Some Chinese investors have pulled back from global investments, but others have gotten a lot more aggressive. So I think those are the two major trends that we see here. And we hope, technology generally tends to bring down barriers. At this point, though, we're looking at more walls going up as opposed to breaking down those barriers. We'll see how this plays out. As early stage investors, we're not so much focused on macro geopolitical impact, mostly focused on how this is impacting our companies. So on the one hand, some of our companies see less competition, but on the other hand, they're less open to receiving Chinese venture investing, or less able to tap Chinese venture investing. So I'd say it's a net break even.
Great, thanks, William, for that insight. Kampanath, if you could share some of this insight based on your investments in Thai and Vietnamese companies as well.
Sure. Since I'm based in Thailand, and we making investment into the companies in Singapore, Thailand, some part in China as well. So actually, we see no significant impact from the geopolitical tensions between the US and China. Where actually I can share you guys about how these the fintechs from these two countries are approaching these regions. I would say that China, like more of the fintech giants, when they come in here, they come through the acquisitions or they're making a lot of investment directly to the fintech players here in this in these regions. For example, here in Thailand, and financials also made investment into one of the largest e-wallets here in these countries. Whereas in the US companies, actually, the US fintech, they're starting off with setting up one of the headquarters in Singapore, rather than go directly to hit the customers. So and then they get the customer from the Singapore first, and then they're working with the multinational companies in Singapore, and use that as a route to penetrate to the other countries like Thailand, Indonesia, Philippines, or Vietnam. So they're slightly having a different strategy to entering these markets. But I would say that more of the China, so they are not tagging directly to the customer, whether it's a B2B or B2C. For the B2C, they are acquiring a lot of e-wallets players, the peer-to-peer players, or some of the lending company here in these countries, in the Southeast Asians. But for the US fintechs, very few of them really make that like investment. So that will be my comments.
Thank you, Kampana. Moving on, I have a question for Renu on the IPO as well. So, there are not many unicorns being created in the fintech space. Health-tech space, as I think I had a chat with you earlier, they have seemed to pick up some momentum there, but not seeing that same way in the fintech space. How do you see this evolving for startups as well as late-stage companies in Asia?
I think a couple of things as far as the health companies are concerned. Back in 2018, the Hong Kong Stock Exchange created the Biotech Board, sort of under Chapter Rule 18A. It allowed for innovative companies in the biotech space, healthcare space, to actually come on and list on the main board as a pre-revenue company. And I think that has meant that a lot of biotech companies, which have a very long lead time to basically before they enter the market because of the clinical trials that are often needed, and it's a very long cycle. So there has been a huge demand from both the companies themselves for funding as well as from investor appetite. Now, clearly, the pandemic has accelerated and made a lot of people sit up and look at the healthcare sector, and it's a very obvious thing to want to invest in. So they've been very popular, they've been very successful across the board. I think what has happened because of the loose monetary policy that we've had over the last couple of years, and because of the fact that valuations both in the public and private markets are so high, there has been a big demand to try and from both the investors and the founders to try and to tap that, to whether they go and do an IPO or raise bigger funds of money, or thirdly, find some way to exit the market or provide liquidity for their investors. I think for fintech companies, particularly at the moment, we are seeing the ones, particularly the very big ones coming out of China, to kind of step back and take a look and see whether their actual business model practices, the way they're looking at their data, the segregation of their businesses actually comply with what is a very evolving regulatory market in China. China has come out and said quite a few new regulations, and so we've seen a little bit of a pullback as companies comply with that. So obviously an example of that was, Ant Financial didn't come through, but at the same time, you saw Lufax have a very successful IPO in the United States. So I think there is that juggle going on, a shift going on. But I think it is just a question of time whether when companies have raised large amounts of funding that we will see that they will come to the market. So I think it's just a question of time. I think the Biotech Board in particular kind of was a catalyst for a lot of the healthcare companies to come and list. But if you look at what's, as you said earlier when you were making that introduction, there are a lot of companies looking to tap into the market. So I think we will just see that, whether they go through a SPAC route or a direct IPO route, or I think there might even be more mergers and acquisition, consolidation within the industry. I see that happening over the next 1 to 2 years, absolutely. And it's good. We will also be able to see, hopefully, large IPOs coming out of the rest of Asia too, not just from the big tech fin players or the likes of Ant Financial, etc., come to the market.
Thanks, Renu. Maybe I'll extend that question to William as well. I mean, what's your view on this? Do you see that there is it true that listing is now a prime focus or a major focus for the bigger mature fintechs? And what do you see as what we can learn from the Chinese fintech listings as well? Do you think that will the other regions also have a similar playbook?
I don't know. The funny thing about me is I'm in tech investing, but I'm a history major. So if you just sort of step back a little bit, I think what the financial institutions, the large banks, the traditional players found is they watch what happened when VCs got a hold of telcos. Telcos used to be important players in the world, and now they're dumb pipes with EBITDA margins that look like ski slopes. And so, starting 5, 6, 7 years ago, they started to invest and acquire pretty heavily. And so they're probably better prepared to defend themselves against the onslaught of, quote unquote, big internet, right? Where you've got the Ant Financials, the Gojeks, the GoTo now, and Grabs of the world. They're better they're able to defend themselves. So you haven't seen that many fintech unicorns because they get acquired, which is not necessarily a bad thing. If you look at the top 100 tech unicorn IPOs, 26 of them, the founders own none of the company when they actually IPO'd. Right, so it's not necessarily such a bad thing that they get acquired, at least for the founders. I'm talking as a early stage VC, because when the founders make no money, we also don't make any money. So I would look to going forward. What do we believe is going to happen? We think that there will be, as Renu said, a lot of local heroes. And then what we hope those to do with our ecosystem is help those local heroes not necessarily just expand, this is in fintech, expand cross-border, but be able to become little mini super apps in their own right by taking the trust that they've earned with their existing customer base and then monetize that trust outside of not just financial services, but also through e-commerce, through health, through education, and even actually games, and other lifestyle services. But those are the main areas that make money. So we're partnering and investing in financial, fintech plays, market by market by market across Southeast Asia. We've got a company with a lending license in Indonesia in our portfolio. We're working on one in Malaysia. We're borrowing another one in Indonesia. In Cambodia, and so on and so forth. Now, usually it takes quite a lot of capital to get these licenses, even in each local market, which means that partnership is going to be key for us. So what we see is probably local leaders building up market by market. And then, I think a regional unicorn will probably be more difficult, but what you'll see is some very nice acquisitions of these local leaders by more regional players over time. What we're hoping, though, is that our ecosystem approach will allow those local leaders to have a choice. Because before it used to be take money from Alibaba, take money from Tencent, or die. And we don't want that to, because the U.S. players, they don't really acquire, right? They don't invest. We want to give the local players a choice, and above and beyond just such as Toko, Tokopedia and Gojek, they kind of combining together so that they have a choice. And so we'll see how this plays out, but that is one reason why you don't see those big, fintech unicorns in Asia, because they're getting acquired, and it's a life-changing event for those entrepreneurs. So you can't blame them.
I think the bigger markets like India, etc., probably could. The markets are big enough there to basically have those unicorns sort of develop. But in the smaller market, it's very difficult to become a regional player. You are going to be much more local. And also remember, when you do go public, the amount of scrutiny that comes with being a public company also may not necessarily be, what some of these founders want. And so maybe it is better to be acquired and rather than necessarily go the IPO route.
Yeah, SPACs and FinTechs, a little bit messy.
Yes, they are messy. Although, funnily enough, the one trend that we have seen is we have seen companies that have been listed in the United States come back to places like Hong Kong and do dual listings, not just a lot of the bigger tech companies, and some of the FinTech companies will also probably be looking to come back as well. If your market is, this part of the world, you want to have that brand recognition and be also potentially be listed here as well.
Great. We have, and thanks for sharing those thoughts. I think they're very useful, I think, for our audience and definitely for me. There's a couple of questions that have come in as well. But let me just ask one last question, which is very close to my heart as well. And I'd let everyone, spend maybe 30 seconds to a minute answering that. Do you have any thoughts on how associations or industry bodies can create more avenues in simplifying access to capital? Being the president of Singapore FinTech Association, that's an obvious question for me to ask. So maybe we can start with Renu.
How fintech associations can provide capital or?
No, not provide capital, can create more avenues in simplifying access to capital.
If you want me to go first, I can go first.
And it could be a no as well.
This question.
William, why don't you go first while I try to
I'll take this one. So fintech associations generally are often act as a bridge between startups and capital, between capital and government, between startups and government. This is a real challenge because dealing with the government is a royal pain in the ass in most parts of the world. And Asia is no different. I would say that Singapore and Hong Kong, lead the world in terms of, being proactive and trying to cross that bridge because their economic survival depends on it. So, how is a bridge, a good, well-structured bridge work? Well, you can find out where the bridge is, it's there. There's like guides and signs and sort of instruction booklets and hopefully like a tour guide, whether it's a person or a pamphlet that tells you where to go. Even though I would say, Hong Kong and Singapore are world-class, world-leading in this respect, it's almost like they've tried too hard. And you get lost in a maze of acronyms. So we've had a lot of success in terms of investing in, Hong Kong startups, so FinTechs, and then taking them across the region. The most recent one is a company we invested in last June called Ignatica in the InsurTech space. And they recently, within 3 months after demo day, we're oversubscribed, $7 million Series A led by Lingfeng. And they've got clients across the region, including China in insurance. But just sort of navigating, the different options of help from the government is challenging. And Singapore also, to some extent, they help so much that it's super hard to navigate. So how do industry organizations like Invest HK and your organization in Singapore help? Be that guide, be that tour guide. And sorry, I went over a minute, but thanks so much for the question.
I think I think where they can really play a role is basically, as William said, act as a bridge, act as a conduit for ideas and exchange, because what startups need and what the regulators need, particularly given that the financial fintech plays in a space which is heavily regulated, and where the investors are and where the public are, that's where the education is needed. That the associations can provide a platform, a base for where that conversation can happen, almost like a little bit in a sandbox where ideas can be tried out. So where, when startups are pushing, for example, for ease of regulation or something else to happen, so you can then say, well, how do we really do it? Have that conversation, I think, is one of the most valuable roles that they could potentially play.
Thank you, Renu, and thank you, William. I think that really ties in well to what we have been hearing as well. Just to finish, I think we've got just 2 more minutes to go. I just want to have 10 seconds of everyone's time. What is your favorite fintech vertical that you're very bullish on? That's an audience question. So maybe we can start with Veronica.
Sure, there's many, but currently my favorite is digital assets, probably looking at decentralized finance and how we can really diversify the investment opportunities for the investors in the ecosystem, everything from private capital markets onwards. So I think that's a very exciting vertical with huge potential.
Thanks. Kampanat?
Sure. Besides the decentralized finance, I also prefer the social commerce payment enabler and those pay later recently in these markets, especially here in Thailand, Vietnam, Philippines, Indonesia. The emerging market will love that. Thanks.
Thanks. William?
Okay, so in 2015, we were the first and only VC into BitMEX, the first crypto derivatives exchange in the world. So in our current batch of SOSV China Accelerator, we have a company called Superworld, which is a metaverse, which cut up the world into 62 billion little 100 square meter plots, and they turned them into NFTs, non-fungible tokens. So basically you can play real world Monopoly. And I really enjoy playing Monopoly. Maybe that's why I'm a venture capitalist today. But this super world is interesting. I could never own a piece of land on the Shanghai Bund. Actually, my cousin-in-law actually did own 60% of Bund 18 at one time. But I did buy the Shanghai Bund on Superworld. The company is going through demo day next Wednesday, 3 p.m. Shanghai time. So check out ChinaAccelerator.com to sign up for that. But we think that NFTs and basically using smart contracts to bring a tradable value to things that were previously not tradable or exchangeable is a breakout moment. So my number 1 was DeFi, but my number 2 is smart contracts associated with content. We think that will be revolutionary, and we're very active investors in this space.
Thank you, William. Renu, 2 seconds, please.
I'm not sure what is left to say. We've covered most of the exciting ones. Perhaps I think on a slightly more prosaic note, maybe could also add InsurTech as an area that I think still has a lot of room to play in. But it doesn't, William, come anywhere close to the excitement of owning the Shanghai Bund for you.
Yeah, you can come visit me.
There you go. I may have to get another NFT or something for a bridge to get there.
Thank you very much, everyone. It was an exciting discussion. I definitely learned a lot. I must say that one of the key points that we have learned is that there is, given the fragmentation of the markets in Asia, we will continue to have these local players grow as we go along. And there may be exits, there may be IPOs coming in, but our focus will continue to remain on local players expanding and maybe acquisitions happening. With that, thank you very much, everyone, for your time, and please stay in touch. Thank you.
Shadab, thanks for great moderating. Appreciate it.
Yes, thank you for having us.
Thank you. Thank you,
Bye-bye.
guys.